Welcome back to the Deep Dive. Today, we're taking a plunge into a document that, well, for many, it might seem about as exciting as watching paint dry, but trust me, it's absolutely foundational for your financial life. Form W-9.
That's right.
We're talking about the request for taxpayer identification number and certification. You might think, it's just a form. I mean, how deep can we really go? But you'd be surprised.
Yeah.
This isn't just about a few boxes and a signature. It's about understanding how your hard-earned money gets reported to the IRS. And crucially, how to avoid some nasty surprises like, unnecessary tax withholding that can really sting.
It absolutely can.
Okay, let's unpack this. We've taken all your source material, the latest IRS instructions, detailed explanations, practical guidance, and we're here to extract the most important nuggets. We're focusing on clarity, some surprising facts, and practical takeaways that you can apply, like right now, to make your financial life smoother.
What's truly fascinating here, I think, is how foundational Form W-9 really is within the U.S. tax system. It's kind of the linchpin for ensuring income is reported correctly.
Right.
And it directly impacts how you, as the recipient, get paid without complications or, delays. Think of it as your tax identity card for businesses you work with.
A tax ID card, I like that.
Yeah. And properly completing this seemingly simple form is a critical, yet often overlooked step in managing your financial life, especially when you're getting payments from clients, businesses, other entities.
Oh, yeah.
Get it wrong, and you could face significant issues, including having a portion of your income, often a substantial 24%, withheld by the payer before it even hits your bank account.
Ouch, 24%.
Yeah, it's a powerful document.
So let's begin our deep dive with the absolute essentials. Form W-9, officially titled Request for Taxpayer Identification Number and Certification, is, well, pretty much what it sounds like. Its primary purpose is for a payer. That could be your freelance client, a bank paying you interest, a company paying royalties, maybe even an employer for non-employee compensation, to gather your correct legal name and your taxpayer identification number, or TIN.
Right, the TI.
They need this info for a really specific and important reason: to report payments they make to you directly to the IRS. But it's also about your certification.
That's key, too.
By signing and submitting this form, you're confirming your U.S. status, you're affirming your TIN is correct, and you're making any claims for exemption from backup withholding. So why does your W-9 matter to you beyond just being like a bureaucratic checkbox? It directly impacts how those payments you receive are handled, whether it's income from a gig economy job, freelance work, dividends from investments, or even just interest on a savings account.
Right, all sorts of payments.
Exactly. A correctly completed W-9 is the gatekeeper to smooth financial transactions and accurate tax reporting. And it could potentially save you from future headaches and even unnecessary tax deductions later on.
That's a perfect way to frame it. From the payer's perspective, the W-9 is absolutely essential for compliance with various Internal Revenue Code sections. We're talking about things like information reporting under sections like 6U41.
Okay, what's that cover again?
That covers payments of $600 or more in the course of a trade or business for things like services, rents, other income, or Section 6049 for interest payments, even Section 6050W for payments made through third-party networks like, say, PayPal or Venmo under certain thresholds.
Got it.
Without a correct and valid W-9 from you, these payers face a significant tax responsibility themselves: the obligation to perform backup withholding on your behalf.
That's the 24% thing again.
That's the 24% thing. It's a very real threat for them. They could be on the hook for withholding that flat 24% of your payment if they don't have proper documentation from you. It's not just a suggestion, it's a legal mandate. Carries penalties for noncompliance.
So they really want that W-9.
Oh, they have a very strong incentive to get this form right. And it's also crucial to highlight that the W-9 is specifically designed for U.S. persons.
Okay, define U.S. persons for us.
Sure, that includes U.S. citizens, resident aliens, U.S. corporations, partnerships, estates, and domestic trusts. If you're a foreign person, so not a U.S. citizen or resident alien, you typically use a W-8 series form, like a W-8-BEN.
Right, W-8-BEN for foreign status.
Exactly. To establish your foreign status and claim any applicable treaty benefits, maybe reduce or eliminate U.S. tax on certain income types. The distinction between W-9 and W-8 forms is fundamental. Using the wrong one can definitely create major headaches for both you and the payer.
Now, you might think a form like the W-9, which feels so standard, right? It's just static, unchanging year after year. But even seemingly simple government documents evolve, and the IRS does make updates.
They do.
And this is where it gets really interesting and incredibly practical, because the latest March 2024 revision of the W-9 instructions includes some critical clarifications, particularly around how limited liability companies or LLCs and other flow-through entities should complete the form.
Yes, this is important stuff.
And many of our listeners operate businesses, work as independent contractors, or are involved in partnerships. So these updates could directly affect how you fill out your next W-9 and, make sure you're compliant.
Indeed, the updates are quite significant, especially for LSCs. Let's really drill down on line 3A, which deals with your tax classification.
Okay, line 3A.
For an LLC that's treated as a disregarded entity, meaning it's a single-member LLC that hasn't elected to be taxed differently, so its income and expenses are reported on the owner's personal tax return.
Like a sole proprietorship using an LLC structure.
Exactly. The instructions now explicitly clarify that you must check the box for the owner's tax classification in the first row on line 3A. So if you're a sole proprietor operating through a single-member LLC, you check the individual sole proprietor box.
Okay, not an LLC box for that type.
And on that first row, no. This is a crucial detail for accurate processing, helps prevent mismatches with IRS records.
So it's not the LLC itself getting the check mark for its legal structure there, but rather the owner's tax identity that's emphasized. Can you give us a concrete example, like how would this look on the form, especially for lines 1 and 2?
Absolutely. This is where many people get confused, and the update brings much-needed clarity. On line 1, you should show the owner's full legal name.
The person's name.
The person's name. Then on line 2, you'd put the disregarded entity's business name.
Okay.
For instance, if Sarah Miller owns and operates Sarah's Creative Solutions LLC as a single-member LLC, line 1 would read Sarah Miller, line 2 would be Sarah's Creative Solutions LLC.
Makes sense.
And on line 3A, Sarah would check the individual sole proprietor box. This setup ensures that when the payer issues a Form 1099 for payments to Sarah's Creative Solutions LLC, the income is correctly attributed to Sarah Miller for IRS matching.
Got it. Like a business card saying, operated by Sarah Miller.
Pretty much. Think of it like that. This clarity helps ensure the information return, like a Form 1099, goes to the right taxpayer for IRS matching purposes. Prevents those dreaded B notices we'll talk about later.
That makes perfect sense. So it's about accurately representing who the IRS should really be looking at for tax purposes, even if you have a separate business identity.
Exactly. Now, for LLCs that are not disregarded, meaning they've elected with the IRS to be taxed as, say, a corporation, either C Corp or S Corp, or as a partnership.
Right, the ones that filed elections.
Yes. Line 3A has a single box dedicated to limited liability company. Here, you simply check that box and then indicate their classification using a single letter. C for C Corporation, S for S Corporation, or P for Partnership right next to it.
Okay, so check the LLC box, then add the C, S, or P.
Correct. And the importance of selecting the correct classification cannot be overstated. It fundamentally dictates how the entity's income and expenses flow through or are taxed at the federal level. Misclassifying an LLC can have significant tax consequences, penalties, incorrect tax computations, the works.
Okay, and then there's a completely new line, line 3B, specifically for entities with foreign partners, owners, or beneficiaries.
Correct.
This sounds like it adds a whole new layer of compliance for these flow-through entities. What's the specific purpose here?
This new line 3B is designed to capture crucial information from partnerships, including LLCs taxed as partnerships, as well as trusts or estates that are flow-through entities.
Right.
It allows them to indicate whether they have foreign partners, foreign owners, or foreign beneficiaries when they're providing this W-9 to another flow-through entity in which they own an interest.
Okay, so it's about nested ownership.
Essentially, yes. The primary purpose is to provide the recipient flow-through entity, the one getting your W-9, with information regarding the status of its indirect foreign interests. This helps them satisfy their own, often complex, reporting requirements, particularly related to Schedules K2 and K3 on Form 1065.
Complex schedules K2 and K3.
Yeah.
That sounds like a mouthful. Can you simplify what that actually means in practical terms for a business?
Good question. Think of Schedules K2 and K3 like a detailed international tax passport for your partnership or flow-through entity.
Okay, a tax passport.
Yeah. If you have foreign partners, these schedules are how you report specific items, income, deductions, credits, other info, with an international component that's relevant for those foreign partners' U.S. tax obligations, or maybe for them to claim tax treaty benefits in their own country. It's all about transparency across borders.
Gotcha.
So if you are a flow-through entity, and you receive a W-9 from one of your partners or owners, and they check this box on line 3B, it's a very clear signal to you.
A red flag, maybe.
Not necessarily a red flag, but a signal that you need to pay attention. It means you may then be required to fill out and provide information on Schedules K2 and K3, or provide similar relevant information to your partners, owners, or beneficiaries, especially regarding their share of effectively connected income, or ECI if they are foreign.
ECI.
This new line streamlines the process for entities to fulfill their often complex international tax reporting and withholding obligations, like under Sections 1446A and F, which deal with withholding on a foreign partner's share of ECI and transfers of partnership interests. It's all about tracing the beneficial ownership and ensuring tax compliance in, an increasingly globalized financial landscape.
That's a lot of crucial detail on entity classification and global compliance. Incredibly helpful for anyone navigating those complex business structures.
Yeah.
Now, let's shift our focus to the absolute core identifier on Form W-9, something you've probably heard of but maybe don't fully understand all the implications. Your taxpayer identification number, or TNI.
Ah, yes, the TIN.
It's foundational, right? Providing a correct and valid TIN is paramount for smooth sailing with your payments and accurate tax reporting.
You're absolutely right. The TIN is essentially your unique tax ID with the IRS, similar to how your fingerprint identifies you,
Good analogy.
For individuals, your TIN is almost always your Social Security number, your SSN. However, for certain resident aliens who aren't eligible for an SSN, maybe due to their immigration status, they apply for an Individual Taxpayer Identification Number, or ITN, using Form W-7.
Okay, SSN or ITIN for individuals. What about businesses?
Right. For entities like corporations, partnerships, or even sole proprietors who have employees or need to file certain excise, employment, or other tax returns, their TIN is an Employer Identification Number, or EIN.
EIN, got it.
It's incredibly important to understand which type of TIN applies to you and to provide it accurately on your W-9. A mismatch or an incorrect number is one of the quickest ways to trigger those dreaded backup withholding notices.
I know a lot of people might not realize that ITINs, unlike SSNs, have a specific expiration rule. Can you elaborate on that? What does it mean for someone filling out a W-9, and more importantly, what's the real-world impact?
This is a very important point, and yeah, it catches many people by surprise. An ITN that hasn't been included on a U.S. federal tax return at least once in the last 3 consecutive tax years will expire.
3 years of non-use on a return.
Correct. So if you got an ITN in, say, 2018 and didn't use it on a tax return for 2019, 2020, or 2021, it would have expired on January 1st, 2022. Now, here's the nuance. If your ITN expires or is deactivated by the IRS, it's still generally usable on Form W-9 itself.
Wait, really? You can use an expired ITN on W-9?
Generally, yes, for the purpose of filling out the form, meaning a payer might accept it and process payments without immediate backup withholding, which is good in the short term. However, the real problem arises down the line.
Ah, there's the catch.
There's the catch. If you need to file a U.S. federal tax return, say, to report income from that freelance gig or claim a refund, you must renew that deactivated ITIN to avoid significant delays in processing your return or even having your refund held up.
Okay, so major processing delays if you need to file a return.
Exactly. So while you can technically use an expired ITIN for the W-9 itself, think of it as a ticking time bomb if you plan to file a tax return. The IRS provides clear instructions and renewal processes on Form W-7. Always keep an eye on your ITIN's active status.
So an expired ITIN might not stop a W-9 from being accepted initially, but could definitely cause a huge headache later when you file taxes or need a refund. That's a huge aha moment for many listeners, I bet, realizing the underlying system at play.
Definitely.
And speaking of the system, what about TIN matching e-services? That sounds technical, but it seems like it has a direct proactive benefit for the payee too.
It absolutely does, and it's a brilliant example of technology preventing problems before they start. The IRS offers TIN matching e-services primarily for large payers, like financial institutions or major corporations.
How does it work?
This system allows them to validate name and TIN combinations before they even submit information returns to the IRS, like Forms 1099 or 1098. The benefit for payers is significant.
Less paperwork, fewer notices.
Exactly. By proactively checking this information, they're much less likely to receive those dreaded B notices, which are official IRS notifications, CP 2100 or CP 2100A, saying your TIN name combo doesn't match their records. This also means fewer penalty notices for the payer.
And the benefit for me, the payee.
For you, the payee, this is a direct and substantial benefit. If your payer uses TIN matching, it means your information is more likely to be correctly recorded right from the outset. This helps prevent future issues like incorrect 1099s being issued, or worse, triggering backup withholding because of a simple data entry error.
That's great.
It's a powerful behind-the-scenes tool that ensures accuracy and helps everyone avoid compliance problems down the line. It's all about proactive prevention, which is always better and far less stressful than, reactive problem solving after a notice arrives in the mail.
Preventing problems is exactly what we want to help our listeners do. And perhaps no problem is more immediately impactful than the concept of backup withholding. For many, this is where the W-9 truly becomes a tax-saving mechanism. Or, maybe more accurately, a tax avoidance mechanism for unnecessary withholding.
That's a good way to put it.
It's a key motivator for both you, the payee, and the payer to make sure that W-9 is filled out correctly. It can seriously impact your cash flow. What exactly is it, and when does it kick in?
Backup withholding, covered under Section 3406 of the Internal Revenue Code, is, well, exactly what it sounds like. It's a requirement for payers to deduct, withhold, and then deposit 24% of certain reportable payments directly with the IRS.
24%. That number keeps coming up.
It's a significant chunk of money, nearly a quarter of your payment, so you absolutely want to understand how to avoid it if it doesn't legitimately apply to you.
Definitely. 24%. That's huge to have unexpectedly taken out of your payment.
Yeah.
Could really throw off a budget. When exactly does the IRS mandate this?
It certainly is, and it applies in 4 very specific scenarios. First, and probably most commonly, if you, the payee, simply don't provide your taxpayer identification number, your TIN, to the payer in the required manner.
Like just not sending in the W-9.
Right, or sending one with a blank TIN field. Second, if the IRS notifies the payer that your TIN is incorrect. This happens when the name and number they have on file for you don't match IRS records. Could be a typo, a name change, maybe an expired ITA causing a mismatch.
Okay. Missing TIN, incorrect TIN. What else?
Third, if there's been a notified payee underreporting of interest or dividends. This is a more serious scenario where the IRS has already told you that you underreported certain interest or dividend income on a previous tax return. Then they notify the payer that you're subject to backup withholding because of this past underreporting.
Yikes. So the IRS tells the payer directly.
Yes. And fourth, if you fail to certify on the form W-9 that you are not subject to backup withholding, that certification is a crucial checkbox on the form, usually in Part 2.
The certification part again.
Exactly, where you confirm your TIN is correct and that you haven't been notified by the IRS that you're subject to backup withholding due to underreporting. If any of these 4 scenarios apply, the payer must withhold that 24% and send it to the IRS.
And what if the payer doesn't do it, even though they're supposed to? Are they penalized? And how long does this backup withholding go on once it starts?
Yes, there's a major trap for payers here. If they don't collect backup withholding as required, they become liable for that uncollected amount.
They're on the hook for the 24%.
They're on the hook for the $240 if they paid you $1,000 and should have withheld. So this provides a very strong incentive for them to ensure your W-9 is completed accurately and completely, often leads them to be quite diligent, even strict, about getting it right.
Makes sense.
And once triggered, the withholding continues until the specific cause is remedied. For instance, if it's due to a missing TIN, it continues until you provide a correct one that matches IRS records. If it's due to underreporting, it continues until the IRS notifies the payer that the backup withholding should stop, which usually happens after you fix the past underreporting and the IRS lists the notification.
This is all about prevention, right? And a lot of people, maybe especially those just starting out freelancing or a new venture, might find themselves in a situation where they've got a new client, they're about to get paid, but they don't have a TIN yet, maybe waiting for an SSN or EIN application to process.
Right.
What happens then? Is there a grace period or is it immediate backup withholding?
That's where the awaiting TIN certificate comes in, but it has very specific rules and, more importantly, significant limitations that many people misunderstand.
Okay, what are the limitations?
For certain types of payments only, specifically interest and dividend payments, and certain payments related to readily tradable instruments like securities, you can submit a properly completed and signed Form W-9 with applied for, written in Part A, where the TIN normally goes.
Applied for. Okay.
In these very specific cases, you get a 60-day grace period from the date the payer receives this awaiting TIN certificate to provide your actual TIN. If you don't provide it within those 60 days, then they must begin backup withholding on those payments.
So during those 60 days, For those specific payments like interest and dividends, you're safe. No 24% withholding.
Not entirely, and this is a critical nuance that can catch people off guard. There's something called the reserve rule, or alternative rules that apply primarily to interest and dividend accounts.
So reserve rule.
Yeah. Even within that 60-day period, if you withdraw more than $500 at one time from an account receiving interest or dividend payments, the payer must back up withhold on those reportable payments unless you reserve an amount equal to the current year's backup withholding rate on all reportable payments made to the account.
Wow, that's complex.
It is. Or, under an alternative rule, they can start withholding on any withdrawals after a 7-day grace period, up to the amount of reportable payments. There's even an option for payers to just start withholding on all reportable payments to the account, regardless of withdrawals, starting no later than 7 business days after getting the awaiting TI certificate, just to be safe.
So applied for isn't a guarantee against withholding even in that 60-day window.
Not a blanket free pass, no. The key takeaway here is that even with an applied for status, vigilance is required, especially if you're dealing with larger sums or specific account types.
That's a subtle but really important detail. Could save someone a lot of money and frustration. And you mentioned this 60-day exemption applies only to certain payments. This is where a lot of freelancers might get tripped up, right? What about other types of income, like non-employee compensation?
This is a crucial caveat, and it's where many independent contractors or new businesses make a costly mistake. The 60-day exemption from backup withholding does not apply to any payment other than interest, dividends, and certain payments relating to readily tradable instruments.
So not for typical freelance work.
Correct. This means if you're receiving other reportable payments, such as non-employee compensation for freelance work, consulting fees, payments for services, which is very common for many of our listeners, backup withholding applies immediately if a PIN is missing or invalid, even if you've just applied for one and are awaiting it.
No grace period at all for those payments.
None. So if you're a new independent contractor waiting for your EIN, your client must withhold 24% of your payment from day one until you provide a valid TIN. That's why getting your TIN, whether it's an SSN or EIN, in place before you start earning this type of income is absolutely crucial.
Wow. Okay.
And even if you do give an awaiting TIN certificate for interest or dividends, you still must certify, under penalties of perjury, that you are not subject to backup withholding for underreporting.
Still have to do that certification.
Yes, if you don't make that certification, backup withholding applies even to the interest and dividends. So the lesson here is clear. Get your TIN as soon as humanly possible and ensure your W-9 is always fully and correctly certified, especially that underreporting clause. It's your best defense against that 24% hit.
Okay, so we've covered the tough news, that 24% backup withholding if things go wrong, and how to avoid it. Now let's pivot to some truly good news for many of you. Specific entities and even certain types of payments are actually exempt from backup withholding.
Yes, the exemptions.
This could be a direct tax-saving insight for you, depending on your situation or the entities you work with. Who qualifies for these valuable exemptions, and how do you claim them?
This is where understanding your entity status truly pays off and can save you from unnecessary withholding. Certain pays are inherently exempt from backup withholding, and if you qualify, you should definitely enter the corresponding exempt pay code on Form W-9.
Exempt pay code. Got it.
And as a payer, a business can generally rely on the pay's claim of exemption unless they have actual knowledge that the code or classification you provided is incorrect. So it's important to claim your exemption correctly.
Okay, so who are some of these exempt pays?
Let's look at some key examples. These often include an organization exempt from tax under Section 501A, like many nonprofits, religious organizations, charities. Also, certain individual retirement arrangements, IRAs, and 403(b)(7) custodial accounts.
Tax-exempt orgs and IRAs. Makes sense.
Right. These entities aren't typically subject to income tax on their main activities, so withholding would be counterproductive. Also, the United States government, its agencies or instrumentalities,
Government entities.
a state, the District of Columbia, a U.S. Commonwealth or territory, or any of their political subdivisions, think state universities, local municipalities. A foreign government is also exempt.
Wow.
And generally, a corporation. This is a very broad and common exemption. If you're incorporated, most payments to your business will not be subject to backup withholding. However,
Oh, there's a however.
there is a very important however, important exceptions we need to discuss in a moment. Also exempt are financial institutions like banks, real estate investment trusts, REITs, entities registered under the Investment Company Act of 1940, like mutual funds, common trust funds, and certain types of trusts that have specific reporting rules already.
That's a good list. And the corporation exemption sounds like a significant benefit. So if I'm operating as a corporation, I'm generally exempt from backup withholding on most payments. That's a powerful incentive for some to incorporate, isn't it?
Yes, that's the general rule and a definite benefit for corporations regarding most types of payments. However, and this is the crucial detail that often surprises people, there are specific payments made to a corporation that are not exempt from backup withholding, even if the corporation is otherwise generally exempt.
Okay, what are these exceptions? This sounds important.
They are critical to know, especially for certain professional services. They include medical and healthcare payments. If you're a corporation providing medical services, payments to your corporation for these services are subject to backup withholding rules if a W-9 isn't provided or is incorrect.
So doctors' practices, clinics, etc., even if incorporated.
Correct. Also, attorney's fees. This is a big one. Payments for legal services made to a corporation are not exempt. This also applies to gross proceeds paid to an attorney that are reportable under Section 6045F, like settlement payments. So if you're a corporate law firm, you still need to ensure your W-9 is impeccable.
Wow, okay, legal fees too.
And payments for services paid by a federal executive agency. While maybe rare for many, if you're a corporation contracting with a federal agency, these payments are also not exempt.
So the takeaway is, if you're a corporation in medical, legal, or federal contracting, don't assume you're exempt for those payments.
Exactly. Do not assume you're automatically exempt from backup withholding on those specific payments. You still need to provide a correct TIN and generally complete the W-9 as if you weren't exempt for those income streams to avoid issues. It's a common pitfall.
That's a really important distinction, yeah. Many professionals, doctors, lawyers, operate as corporations. This could prevent a nasty surprise. What about payments themselves? Are there certain types of payments that are exempt from backup withholding, regardless of who the payee is?
Absolutely. The general rule is that payments not subject to information reporting are also not subject to backup withholding. But beyond that, there's a list of specific payment types that are generally exempt, usually because they either have their own dedicated withholding mechanisms or they fall outside the scope of reportable income for backup withholding.
Like what?
Like wages, your employer already withholds federal income tax, Social Security, Medicare.
Yeah.
So backup withholding isn't needed there.
Right. Payroll taxes cover that.
Distributions from a pension, annuity, profit sharing, or stock bonus plan, any IRA or other deferred compensation plans, these have their own, often elective, withholding rules under different IRS sections.
Retirement accounts, got it.
Distributions from medical or health savings accounts, HSAs, and long-term care benefits. Also, certain gambling winnings if they are already subject to regular gambling winnings withholding.
Only if regular withholding applies.
Right. If regular gambling winnings withholding isn't required, maybe the amount is below the threshold, or for certain types of winnings, then backup withholding will apply if you fail to furnish a TIN. Important distinction for casual gamblers.
Oh, okay.
Also exempt. Payments related to real estate transactions reportable under Section 6045E. Canceled debts reportable under Section 6050P. And perhaps most interestingly for some, fish purchases for cash reportable under Section 6050R.
Fish purchases for cash, really.
Really? This applies to persons engaged in the trade or business of purchasing fish for resale who pay cash for the purchase. It's a very specific kind of historical exemption.
Okay, well, that's specific. So for the listener, the actionable insight here is to thoroughly review their income streams and their entity structure. If they or their entity fall under any of these exempt categories, they need to claim it on the W-9.
Exactly. When you fill out your W-9, there's a specific space in Part 1 below the name and business name lines for an exempt pay code. If you qualify for one of these exemptions, you find the appropriate code from the W-9 instructions and enter it there.
Put the code in the box.
Put the code in the box. This signals clearly to the payer that they don't need to apply backup withholding to payments made to you. Ensures you receive the full amount you're owed without unnecessary deductions. It truly empowers you to manage your financial inflows effectively and, proactively handle your tax situation through proper documentation.
Now, if you thought Form W-9 was just about backup withholding, well, prepare for another layer of complexity, one that's particularly relevant for those with international connections or dealings with foreign financial institutions. The W-9 also touches upon FATCA,
FATCA.
the Foreign Account Tax Compliance Act. This adds another dimension to compliance that's entirely distinct from backup withholding rules, but equally important in its scope.
You've hit on a critical point that causes a lot of confusion. FACSA, or Chapter 4 of the Internal Revenue Code, has a very specific and, frankly, ambitious purpose. It aims to get information on U.S. account holders from foreign financial institutions, FFIs, and certain non-financial foreign entities, NFFEs, to combat offshore tax evasion.
So it's about tracking money overseas.
Primarily, yes. While it's perfectly legal for U.S. taxpayers to own offshore structures or accounts, they must comply with U.S. income tax and information reporting requirements related to those activities. FACA helps the IRS identify potentially undisclosed foreign accounts held by U.S. persons.
So how does the W-9, a U.S. domestic form, fit into this vast global effort to track offshore assets?
Good question. Form W-9 includes a specific space in Part 1 for an exemption from FACA reporting code. Now, this isn't usually about your direct liability for FACA withholding as an individual or typical U.S. business receiving a payment within the U.S. Rather, it's about whether the entity requesting the W-9 from you, which might be a U.S. pay, needs to determine if you are a specified U.S. person for FACA purposes, information they might then need to report to a foreign entity in certain situations.
So is that information sharing, potentially internationally?
Potentially, yes. For example, a U.S. bank maintaining an account here in the U.S. generally doesn't need a FATSA exemption code from a U.S. person for its own FACA reporting, because FACA reporting on U.S. persons primarily applies to FFIs and NFFEs dealing with foreign accounts. However, if a U.S. entity is receiving a payment from a foreign entity, and that foreign entity is trying to figure out its FACA withholding obligations, then a U.S. person's W-9, including their FACA status, becomes relevant.
I see. And what happens if these foreign entities don't comply with FACA? What's the stick behind this global reporting regime?
If FFIs and NFFEs don't comply with FACSA's reporting requirements, maybe by failing to enter into an agreement with the IRS, failing to identify U.S. accounts, or failing to provide documentation saying they don't have substantial U.S. owners, they face a steep 30% withholding rate on withholdable payments made to them.
30%. That's even higher than backup withholding.
It is, and these withholdable payments include certain U.S. source income like interest, dividends, rents, other fixed or determinable annual or periodical income, FDAP income, as well as gross proceeds from selling property that can produce U.S. source interest or dividends.
So a big incentive to comply.
A very significant deterrent, yes. The W-9, in certain contexts, helps a U.S. payer determine if a U.S. person is a specified U.S. person for FACSA purposes, which in turn dictates whether that U.S. person's information might eventually need to be passed on to foreign financial institutions.
Who is not considered a specified U.S. person and thus generally exempt from these FACA reporting requirements. This sounds like another area where knowing your status can save you from complications or misclassification.
Indeed. These are categories of U.S. persons that are generally exempt from FATSA reporting requirements. And the list includes many of the same types of entities we discussed for backup withholding exemptions.
Ah, okay. Some overlap.
Yes, because they are typically subject to other robust regulatory or reporting regimes, making FATSA reporting kind of redundant for them. The list includes tax-exempt organizations under Section 501A or certain IRAs.
Got it.
The U.S. government and its agencies, state governments, D.C., U.S. territories, and their subdivisions, publicly traded corporations and corporations in the same affiliated group, registered dealers in securities, commodities, or derivatives.
Financial players.
Right. REITs and RSHIs, mutual funds, banks, brokers, common trust funds, and certain types of tax-exempt trusts.
Okay.
The crucial distinction to remember here, though, is that an exemption from FATSA reporting, or the lack thereof, does not affect the backup withholding rules we just discussed.
Completely separate things.
Yeah. Entirely separate considerations. They operate under different parts of the Tax Code Chapter 4 for FACTA, Section 3406 for backup withholding. It's a common point of confusion to mix them up, but they serve different purposes and have different triggers.
That's a critical clarification. Easy to conflate those two. What about joint accounts that involve foreign payees? How does backup withholding apply there, especially with FDIA in the background?
This is a complex area, but generally, under Chapter 4 rules, if the first pay on a joint account provides a Form W-8 or similar statement indicating foreign status, backup withholding will still apply unless every joint pay provides valid documentation regarding their foreign status, like a W-8 bin.
Everyone needs documentation.
Or at least one of the joint pays who hasn't established foreign status provides a valid TIN. Essentially, the IRS wants to make sure someone is clearly identified as responsible. If one of the U.S. joint pays provides a TIN, that number is generally used for backup withholding and information reporting, and no withholding is required on the whole payment. Conversely, if a withholding agent, the entity making the payment, can't reliably associate a payment with valid documentation from each payee in a joint account where all appear to be individuals, the payment is generally presumed to be made to an unidentified U.S. person, and backup withholding applies.
Presumed U.S. person. So, withhold.
Pretty much. This rule highlights the global effort to ensure tax compliance and prevent undisclosed offshore assets or income from slipping through the cracks. Underscores the importance of clear documentation from all parties in any joint arrangement.
We've covered the what and the why of Form W-9, including those crucial details about avoiding unnecessary withholding and understanding international compliance like FATCA. Now, let's turn to the how, the practical aspects of submitting W-9s and what payers are responsible for.
Right, the nuts and bolts.
This is important for you to understand, not just if you're receiving payments, but also if you're ever in the position of requesting W-9s from others, maybe as a small business owner hiring contractors.
Understanding these practicalities is absolutely key to smooth financial operations for both sides. First, let's talk about substitute Form W-9s. Companies are not legally required to use the official IRS Form W-9 download.
They can make your own version.
They can, and often do. They can develop their own version, called a substitute Form W-9, as long as it's substantially similar to the official form and meets specific IRS certification requirements.
What are the must-haves?
The absolute non-negotiables are that it must clearly request the payee's correct legal name and TIN, and it must be signed and dated under penalties of perjury by the payee or an authorized person.
Okay, name, TIN, signature under penalties of perjury.
Correct.
So a company can't just slap a W-9 at the end of a multi-page service agreement or contract and call it a day, burying the tax certification within other legal jargon.
Exactly. This is a vital consumer protection. The IRS explicitly states that payers cannot require the payee, by signing, to agree to provisions unrelated to the required tax certifications. And they certainly can't imply or state that you might be subject to backup withholding unless you agree to other unrelated provisions on their substitute form. The tax certifications verifying your TIN, confirming you're not subject to backup withholding for underreporting, stating you're a U.S. person, certifying any FT exemption code must be clearly and conspicuously stated.
How do they make it stand out?
If a substitute W-9 is incorporated into other business forms, say part of an onboarding packet, those certifications need to stand out. This can be done using a separate signature line just for the tax certifications. Or, if a single signature line is used for the whole document, the W-9 certifications must be highlighted, put in a distinct box, printed in boldface type, or presented in some other way that makes them visually distinct. Ensures the payee is aware of what they are certifying.
Okay, there are rules for clarity.
And there's a specific IRS-mandated statement that must appear immediately above the single signature line if it's combined with other documents. The IRS does not require your consent to any provision of this document other than the certifications required to avoid backup withholding.
That's a critical safeguard for payees.
Is.
That's a great consumer protection rule. Prevents companies from trying to sneak in other agreements under the guise of a tax form. And what about the instructions? Does the company using a substitute W-9 have to give you the official IRS instructions?
Not always. If a substitute form is used, the payer is only required to provide the official W-9 instructions if you, the payee, specifically request them.
Okay, only if you ask.
However, there's a critical exception. If the IRS has already notified you, the payee, that you are subject to backup withholding due to underreporting of interest and dividends, then the payer must instruct you to strike out the language in the certification that relates to underreporting.
If you've already been flagged for underreporting.
Correct. This instruction can be given orally or in writing. This ensures the W-9 accurately reflects your current tax situation regarding that specific issue.
Let's move to how payers actually use this information. How should they be reporting names and TINs on information returns like Form 1099 based on the W-9 you provide?
When a payer files an information return with the IRS, like a 1099 NEC for non-employee compensation or a 1099 INT for interest, they must show the full name and address exactly as you provided it on your Form W-9.
Exactly as on the W-9.
Yes. If you marked your address New W on the W-9, that's a clear signal for the payer to update their records. Critically, if an account has more than one name, like a joint bank account or a business account with multiple owners, the payer must only enter the name of the payee whose TIN is shown on the Form W-9 on the first name line of the information return.
Only the name matching the TIN goes first.
Right. Other names can be listed below that first line, but the primary name must match the TIN. And for ITINs, this is particularly important. The name on the W-9 must exactly match line 1A of the Form W-7 application you used to get it.
Exact match for ITINs.
This precision is absolutely vital for the IRS's automated matching systems. Even a small discrepancy can trigger a mismatch, leading to those B notices.
And what if there is a mismatch? We've talked about B notices before, where the IRS tells the payer the name and TIN don't match. What's the payer's responsibility then? And what does it mean for the payee?
When a payer receives a notice from the IRS, often a B notice, specifically IRS Notice CP2100 or CP2100A, indicating the payee's name and TIN on an information return they filed don't match IRS records, the payer has a legally mandated responsibility.
What do they have to do?
They have to solicit a new, correct TIN from you, the payee. They must send you what's called a first B notice and often include a blank Form W-9 for you to correct and return.
Okay. They have to ask you to fix it.
Yes. If you don't respond with a correct TIN, they'll likely send a second B notice later. If the issue isn't remedied, this is typically where backup withholding gets triggered because the payer still doesn't have reliable documentation.
Right. Back to square one.
Which is why the IRS offers TIN matching e-services to help payers prevent these issues in the first place. By validating TIN and name combinations before filing, payers get fewer B notices, fewer penalty notices, which ultimately benefits everyone by ensuring accurate reporting from the start.
We also briefly touched on withholding agents. What exactly is their role in this whole ecosystem of payments and reporting? They sound like they have a lot of responsibility.
They do, and it's a broad role. A withholding agent is defined very broadly by the IRS as any person, U.S. or foreign, individual or entity who has control, receipt, custody, disposal, or payment of a withholdable payment or foreign pass-through payment.
So anyone handling the money, basically.
Pretty much. Their primary responsibility is to ensure they can reliably associate payments with valid documentation. That includes your Form W-9 for U.S. persons or a Form W-8 for foreign persons. They generally can rely on your W-9 if they get it before making the payment and don't know or have reason to know that the information on it is unreliable or incorrect. This means if your circumstances change, say your tax status changes, or you move abroad and are no longer a U.S. person, your existing W-9 might become invalid.
And you need to tell them.
You have a responsibility to notify the payer or withholding agent to provide updated documentation. If they determine your documentation is invalid, they might be required to begin withholding.
And what about qualified intermediaries, QIs? That sounds specialized maybe for international financial flows.
It is. The Qualified Intermediary, or QI system, is designed to simplify withholding and reporting obligations, particularly for foreign financial institutions or foreign branches of U.S. financial institutions dealing with U.S. source income flowing to non-U.S. persons.
So they act as a bridge.
In a way, yes. A QI can enter into a formal agreement with the IRS that allows them favorable documentation, reporting, and withholding tax treatment. They essentially streamline the complex withholding and reporting under Chapters 3 and 4 for amounts paid to their account holders. They act as a trusted link in the chain,
making it easier for everyone else.
They effectively aggregate and manage the W-9s and other documentation from their account holders, simplifying the process for upstream payers and helping ensure the correct amount of tax is withheld from foreign persons and reported. They assume primary withholding and reporting responsibility.
Finally, in our increasingly digital world, can W-9s be submitted electronically? Or does it still have to be a paper form with a wet signature?
Absolutely. W-9s can be submitted electronically, and this is becoming increasingly common, especially with remote work and digital business platforms.
That's convenient.
The IRS explicitly allows payers to establish systems for payees to submit Forms W-9 electronically, including by fax. However, there are strict requirements for these electronic systems to ensure integrity and authenticity.
Like what kind of requirements?
The system must ensure the information received is exactly what was sent. It must document all instances of user access that result in a submission. It also needs to make reasonably certain that the person accessing the system and submitting the form is actually the person identified on the W-9, often through multi-factor authentication or other ID verification.
Security and authentication.
Right. The system must provide the same information as a paper form W-9, allow the payee to review it, and be able to supply a hard copy if the IRS requests it for audit. And crucially, for forms needing a signature, the final entry must be an electronic signature by the payee, executed under penalties of perjury, that authenticates and verifies the submission.
So the e-signature counts legally.
Exactly. It ensures the same legal weight as a wet signature on paper. This is highly relevant for many listeners as more and more companies adopt electronic W-9 processes. Understanding these rules gives you confidence in the validity and security of the process.
That's incredibly helpful. Before we wrap up, there's one vital aspect of payer responsibility we didn't explicitly touch on. How payers report the taxes they do withhold. Where does that money actually go? How is it tracked?
That's a critical point to close on. For federal income tax withheld from non-payroll payments, which includes all backup withholding, the payer uses Form 945, Annual Return of Withheld Federal Income Tax.
Form 945. Okay.
This form is filed annually and reconciles all the backup withholding amounts collected throughout the year. The payer also has to deposit these withheld taxes with the Treasury, typically via electronic funds transfer, much like employers deposit payroll taxes. And this Form 945 is entirely separate from Form 1042, Annual Withholding Tax Return for U.S. source income of foreign persons.
Form 1042 for foreign persons.
Correct. Form 242 is specifically for tax withheld under Chapter 3, that's withholding on non-resident aliens and foreign corporations, and Chapter 4, a FATISA, withholding from U.S. source income paid to foreign persons. So, if a payer is dealing with both U.S. and foreign payees, they might be filing both a Form 945 for U.S. backup withholding and a Form 1042 for foreign withholding.
Two different systems.
These separate reporting mechanisms underscore the distinct tax rules for U.S. persons versus foreign persons, even if both involve withholding. It's how the IRS keeps track of every dollar. Hashtag tag outro.
Wow, what an extensive journey through a form that, yeah, on the surface looks so deceptively simple. We've gone from basic ID to complex entity classifications, ITI nuances, the ever-present threat of backup withholding, the global reach of FATITA, and even the very practical responsibilities of both you and the payer.
It covers a lot of ground.
It really does. The Form W-9 is far more significant than just a routine request for a number. It's your critical link to ensuring accurate income reporting to the IRS, preventing that steep 24% unnecessary withholding from your hard-earned money, and confirming your tax status as a U.S. person. Understanding these seemingly small details really helps you avoid headaches, maintain financial clarity, and proactively ensure tax compliance in your business and personal dealings. So after all of this, what does this all mean for you, the listener?
Well, I think it means that while the W-9 might appear straightforward, its nuances, particularly around things like disregarded entities, the implications for flow-through entities with foreign partners, and the specific conditions that trigger backup withholding or allow for those crucial exemptions, they really underscore the paramount importance of precision and proactivity in all your tax documentation.
Precision and proactivity.
Yeah, this isn't just about passively filling out a form when asked. It's about actively managing your tax identity and your financial inflows.
And how might understanding these specific details of the W-9 empower you to better advocate for yourself, or maybe even advise others, in various financial and business arrangements, ultimately helping to optimize your financial well-being?
By grasping these details, you gain the confidence to ensure correct reporting right from the outset, which is, honestly, the single most effective way to prevent future tax complications, avoid delays in receiving your full payments, or, those unwelcome and frustrating surprises of backup withholding.
All right, preventing the problems up front.
Exactly. It gives you the clarity to ask the right questions, maybe verify the legitimacy of substitute forms, and ensure your financial life runs as smoothly as possible. Ultimately, it empowers you to protect your income and simplify your tax life.
Good advice.
And as always, for your individual circumstances, seeking personalized advice from a qualified tax advisor is really an invaluable step to ensure full compliance and optimize your specific situation.
Absolutely. Always consult a professional for your unique situation. But hopefully, this deep dive has given you a robust foundation and maybe a new appreciation for the mighty Form W-9.
Hopefully.
Thank you for joining us on the deep dive. And remember to keep exploring one crucial document at a time. We'll catch you on the next one.